Hello friends, welcome to ICSI GST video classes. Friends, today we will cover the topic under GST tax invoice, debit note and credit note. So today's discussion will revolve around basically two sections. One is section 31 and another is section 34 of CGST Act 2017. Okay, now let us discuss the importance of tax invoice. According to me, tax invoice is the fundamental or in fact it is a foundation on which whole structure of your return filing is actually based. If you are making a wrong tax invoice, the content mentioned in the tax invoice is wrong, then automatically the return filing will be wrong. So it means the first step which will be taken is the making of the correct invoices. Okay. Now in this slide I have separated this word invoice in this pie chart. Reason being, in the GST regime, invoice and tax invoice, both the things are actually different. You can't say that you will issue the invoice because technically the tax invoice has certain meaning. When I am saying a tax invoice, it indicates in this invoice rate of tax is mentioned on the product and I am charging and collecting the tax from the ultimate consumer, right. So this is called the tax invoice. Another word which is used under this regime is bill of supply. Bill of supply, you will issue this bill of supply at the situation when you are doing composition supply. If you are a composite dealer, then at that time you are supposed to issue the bill of supply. You will not issue tax invoice, reason being you are not collecting the tax from the ultimate consumer. There is one another situation under which the bill of supply is issued, and the situation is, for example, if you are doing the supply of some exempted goods, under that situation also, because it is exempted, no tax is applicable. If there is a no tax, there is a no question of tax invoice. So it means, but there should be certain document now which is showing that there is a supply and the name of that document will be bill of supply. So this is the technical or the legal meaning of bill of supply. Thereafter comes the export invoice. So from the word itself, it's self-explanatory that when you are doing some exports, you are supplying goods or services or both out of India. At that time, what type of invoice you will issue? You will make export invoice under that situation. So friends, this is the basic fundamental of this concept, tax invoice, bill of supply and the export invoice. So please do not use one word invoice only. Out of these three, any word can be used as per the circumstances. Now we are revolving around the tax invoice. Now our focus is the tax invoice right now. Now who will issue the tax invoice? Who is authorized to issue the tax invoice? So the answer here is as per section 31 of CGST Act 2040. Now the question arises, who will issue a tax invoice? Who means here? The who will issue here, like the registered person supplying a taxable goods or services or both. So here which two points are important? One is the taxable person, another highlight here is the supplying the taxable goods. Only then a registered person can issue tax invoice. Now after this we will discuss when point, that when will the tax invoice be issued for supply of goods, because now here as per section 31 we will divide the time period according to the goods separately and services separately. So, here in this slide I am explaining only the part goods. Like for example, if I am supplying the goods, for example, if I am supplying some bottles. So, at that time this is called the goods. Now, when here is the time when I am supposed to issue tax invoice, at what time? So, as per the act, before or at the time of removal of goods for supply to the recipient, where the supply involves the movement of good. For example, movement here, I am in Delhi, goods are moving in Maharashtra, there is a movement, at that point of time I will issue tax invoice. Or the delivery of the goods or making available thereof to the recipient in any other case. For example, if I have a shop in Delhi and I am someone came to the counter in my shop and I am just handing over the product to the customer, at that very point I am supposed to issue tax invoice to the recipient. So, these are the conditions or the time period when I am supposed to issue tax invoice in case of goods. Now, another situation in case of the services, when will be the tax invoice to be issued for services? Here, before or after the provision of service, but within a prescribed time. Here in the act it is mentioned the prescribed period. So, what is the prescribed here is, like for example, if I am supplying goods today, sorry, not the goods, here we will mention if I am supplying the, now the next situation is, when will tax invoice be issued for the supply of services? Now, the time is before or after the provision of services, but within a prescribed period. So, here the prescribed period is within 30 days. For example, if I am supplying some services today, it means within the 30 days from today I have to issue tax invoice to the recipient, right. Now, next question arises. Now, we are clear about who, when. Now, the next question is, what is to be shown in the tax invoice? What type of information I have to provide in my tax invoice? So, in section 31 they have briefly mentioned the few things about the mentioning of the content in the tax invoice, but in the prescribed rules they have provide the detail about the content matter. Approximately there are 16 to 17 items which are supposed to be mentioned in the tax invoice as per the applicability on that particular business. But section 31 talks about description, quantity, value of the goods, what is the tax charge on that, you will clearly mention here what is the amount of the CGST separately, again you will mention the rate or the amount for the SGST, CGST, if there is the applicability of IGST, then separately IGST will be shown. So, these are the few basic requirements which are mentioned in 31, and for detail you have to refer the rules part, the related rules for the same. Now, in substitute to the tax invoice, there are certain other documents also, which government says that now under this situation you are not supposed to issue the tax invoice, but if you are doing a business of insurance, then government will consider the insurance policy as the invoice. In case of banking business, government said, in case of the banking, your bank statement will be considered as tax invoice. You need not to separately issue the tax invoice. In case of the transporters, government mentioned, okay, you need not to issue the tax invoice. You just provide, you just issue the consignment note. It is considered as your tax invoice. In the case example of airline business, they said your air tickets, they will be considered as invoice. You need not to separately issue the invoices. So, these are the few examples in which other documents they are considered as the substitute for your invoices. Now, another fundamental about the revised invoice. Now, what is the meaning of the revised invoice here? Revised means you can make some changes or modification in your original invoice. Now, under what circumstances you are allowed to do this issuing of this revised invoice? For example, there is a need to get registration for my business is on 1st October 2017. This is the date on which actually I crossed the threshold limit, for example 20 lakhs, which is prescribed by the government. Now I am supposed to take the registration, right? Now what happened? Right now on the 1st of October I am not registered because I am given a 30 days to get my registration from the beginning of the 1st October. So now I applied for the registration on 20th of October 2017. Now the duration of this 1st October to the 20th October, in this duration I cannot issue the tax invoice, although I am liable to collect the tax from the recipient. Even then I cannot collect actually tax unless and until a registration certificate is issued to me. So, under this situation, or for example on 20th October I got my registration. Now after that time period, after the 20th of October, the supplies made by my business during the 1st of October to the 20th of October, against these supplies I will issue revised invoice, because already one original invoice is issued. Against that original invoice which was not showing the tax component, now with the tax component, with the rate of the tax, amount of the tax, now I will issue revised invoice to the business houses to whom I have made the supplies between the time period 1st October to the 20th October. So, this is the scenario under which I am allowed to issue revised invoice. Hope this concept is clear to you regarding the revised invoice. Now, then other fundamentals about the receipt voucher, because now there are various types. In this video we are actually covering the fundamental part only, just the meaning of few things, few documents which are very much closely related to your invoices or which are supposed to be issued in substitute to invoice or which are associated with the invoicing. So, we are covering those topics, the fundamentals about those documents actually which we are supposed to be issued in these scenarios. Now, let us discuss through this slide receipt voucher. Now, you will issue this receipt voucher at the time or under the situation when there is a receipt of some advance payment. For example, if I have to supply some chairs, right, the happening of this event, supply will happen in, for example, after the 2 months, supply will happen after the 2 months. But before that I have received certain amount of advance payment I have received. So, under this circumstance, which document I am supposed to prepare, and that document is called the receipt voucher, right. Hope this point is clear to you. Now, we will come to the refund voucher. What is the meaning of refund voucher under this regime? Now, for example, if I take the trail of the previous example, now I have received the payment, advance payment I have received. Now, due to certain reason what has happened that now I am unable to supply chairs, right. If I am unable to make the supply of the chairs, then it means I am not supposed to get the payment against the same. I have to give this money back to the recipient because I am not supplying the chairs to the recipient. So, it means under that situation which document I am supposed to issue, and that document is the refund voucher, right. Now, the next very important document which will be issued or which will be made is payment voucher. Now, the situation or the circumstances under which this payment voucher will be created, and the situation is under section 9 subsection 3 or section 9 subsection 4. These two sections are related to your reverse charge. Now, under the reverse charge there is a very interesting concept of making the self invoicing. So, it means another document we learned today is self invoice also. Under the reverse charge, it is not the supplier who is going to make the invoice, tax invoice in fact. Who is going to issue the invoice? Recipient, because this is the reverse charge mechanism under section 9 subsection 3 and section 9 subsection 4. So, under this one thing you will issue self invoice, you are a recipient, you will make a invoice. This is not the only document, that is the self invoice which you are going to make. Apart from this, very important document which people are actually not following these days, and people are just forgetting about making of this important document as well, and this important document is the payment voucher. So, at the time of making the payment to the supplier, because now you are the recipient, you are making the payment to the supplier, at that time how to authenticate that you have made a payment to the supplier? To authenticate this transaction, you will issue payment voucher. So, in this section two documents will have to be created. One is your payment voucher and another is your self invoice, right. So, friends, hope till time you are clear with the fundamentals of invoice. Now, let us begin with one another thing, another documents. Today we are just discussing about the documents only, right. Now, this is the delivery challan. This is the another document. Now, again, under which situation I am supposed to issue the delivery challan? Broadly, there are three situations under which we are supposed to issue this delivery challan. First is the liquid gas. Now, mind this thing that under the delivery challan, now please take care that the delivery challan and tax invoice, these are two separate things. And delivery challan, in delivery challan you will not mention taxes part, no. Because for tax there is always one document to be used, that is called the tax invoice. But now in the delivery challan, tax component will not be shown. So, the first example about which I am talking here, liquid gas. At the time of the supply of the liquid gas, tax invoice is not issued. You know what is the reason behind? Reason is due to the evaporation. For example, whatever quantity you are supplying, the recipient never receive the quantity which is supplied actually. Always they used to get the less quantity. So, the moment liquid gas reached at in the premises of the recipient, at that time it is noted that quantity has been received by the recipient, and on the basis of that quantity tax is charged. It means when there is a movement of the liquid gas, for example from Gujarat to Tamil Nadu, there is a movement of liquid gas. At that point of time, first of all delivery challan will be issued, and when the recipient will receive the liquid gas, thereafter on the basis of the amount received of the liquid gas, tax invoice will be created, right. This is the one scenario. Now, let us discuss the second scenario, goods on approval. Now, let us understand this concept with the help of one example. For example, I am in the business of selling, for example, sarees. Now, on the approval basis contract, I supply 100 sarees in Maharashtra. From Delhi to Maharashtra, I supplied 100 sarees on the contract or on the agreement, goods on approval basis, right. So, at this situation, initially at the time of the movement of the sarees from the Delhi to Maharashtra, delivery challan will be issued. And for example, now the recipient, he approves only 80 sarees. What it means? Now I will collect the tax only against the 80 sarees, not the 100 sarees, because as per the contract, we have already decided that contract is the goods on approval basis. Now he has approved only 80 sarees. It means tax will be collected on only 80 sarees after the approval. But before that I have to authenticate, otherwise the goods cannot move from one place to another. Without any documents, movement is not allowed. At least I have some document. So, at that time, which document is applicable? A delivery challan is applicable. This was the second situation. Now, the third situation, it is about the job work. Now, under this situation, for example, I am a principal, right. I am getting work from the job worker, right. For example, I am getting the embroidery on the sarees and I am delivering 100 sarees to the job worker for getting embroidery. So, in this case, when I am supplying the 100 sarees to the job worker, I am a principal here, at that time supply made by me as a principal will be on the document delivery challan, because I am not collecting any tax from the job worker here, right. But certainly there should be one document which should authenticate, which is the legal document, which should show that there is a movement of 100 sarees. So, which document will tell me that there is a movement of 100 sarees? And that document is delivery challan, right. So, these are the three situations under which we will issue delivery challan. So, friends, now next document in the list of all these documents, the next document is credit note. Now, let us discuss under which situation we will issue this credit note, under which situation this document is to be issued. Now, first situation is, for example, the taxable value or the tax charge is found to be in excess. At that time, you will issue the credit note. For example, I am supposed to collect 500 rupees as a GST tax, but I have collected 600 rupees. It means there is an excess of collection of taxes with the amount rupees 100, excess of rupees 100 is there. But now how to set off this thing, how to set off this tax? For this we will issue credit note. This is the one situation. For example, goods are returned. Now you have made the supply of, for example, the 100 sarees, and that too on the tax invoice. Here the situation is that the supply of sari, 100 pieces of sari, it was on the tax invoice, right. It is not on the delivery here, right. It is on the tax invoice. You have already paid a tax against these 100 sarees, but now the recipient has actually returned the sarees. Now under this circumstances, which documentary proof will be created, which document is to be issued, and that document is credit note. Now the third situation, for example, now there is a delivery of 100 sarees, but now the recipient find that there is a defect in the 20 sarees. Now he is sending back the 20 sarees, and the situation here is that he has already paid tax on the 100 sarees, but now he has received only the 80 sarees because he had returned the 20 sarees back to the supplier, and he is not supposed to pay the tax on that 20 sarees because he has received only the 80 which are in right condition. So under this circumstances also credit note will be issued. So all the provision of this credit note and the debit note you will find in section 34 of CGST Act 2017. Now friends, next document is the debit note. Now again, under what circumstances we will issue the debit note, and the situation is when the taxable value or the tax charge is found to be less than the actual amount. For example, now I have collected for example 400 as a tax, but later on I came to know that the actual liability of the tax is rupees 500, because the tax is the liability of the recipient, it is not the liability of the supplier under the concept of indirect taxation. So it means who is supposed to pay the exact amount? Payment is done by the recipient actually, but collected by the supplier and deposited by the supplier in the government exchequer, right. So this is the process of indirect taxation. So here now, if later on as a supplier I came to know that I have received only 400 rupees as a tax amount, but due to some mistake the amount collected is rupees 400, but the actual amount is 500 rupees. It means there is a short collection of rupees 100. It means from whom I will take this 100 rupees? Definitely from the ultimate consumer I will collect this amount. And to collect this amount, which document I will issue? So here the document is the debit note. Against this document I will receive the payment of rupees 100 from the ultimate consumer. So friends, these are the few documents which are covered under section 31 and section 34 of the CGST Act. Now you must have observed that today we are entering in the digital India regime. So now you have observed that n number of documents they are issued, they are made, and all the documents they are the digital documents, they are created digitally, online creation of these documents is here. So it means we are now entering in a secure regime where